The largest wipeout ever recorded by any stock in US history. DeepSeek is the story of the last 24 hours, and everybody is going absolutely insane. But what does it mean for us as traders and investors as Wall Street starts to get involved at the end of day close? Yes, dark pool liquidity was looking absolutely massive, and in today's video, we'll take a look at what options markets and these trades are telling us about what's going to happen next. As we suspected, markets were overbought. They've now sold off, but is fear already at the peak? In today's video, we'll break it all down together, along with why 300 stocks were actually up over the last 24 hours and what that means. Never have we seen this recorded other than one other time, and it'll surprise you when it was. So as markets look bubbly, treasuries start to regain control, and of course, some of our favorites, such as gold, still look in the position of potentially moving towards 3,000. What exactly is going on? Let's cover it right now together. Well, welcome back everybody to the Daily Show, and what a day we had. One of the biggest sell-offs ever recorded across the markets, but particularly a new record hit. Nvidia losing like $600 billion of market cap in one day. Should we be panicking, or is this actually still okay for markets? Well, in today's video, we'll take a look at what DeepSeek is, what it means for us, and obviously what the data is suggesting could happen next. But just a shout out to the Aussies out there. If you're able to attend our free events, we've got two amazing events that are filling up fast for both Perth in February and Brisbane, Australia. Make sure to look in the pinned comments down below if you're interested in joining there. And make sure also to sign up and follow us across all platforms, as 2025 is going to be an absolutely wild year. So in our previous video over the weekend, we talked about complacency. We talked about how there were no puts in the markets and insiders were potentially starting to sell. We also saw some dark pool liquidity already appearing right at the highs, and we now know, of course, what that was. It were people getting out just before the DeepSeek information went everywhere. So what happens next? Well, of course, puts have now been laid into the markets, and we'll show you that later on with prices. But just remember, corporate insiders are still selling at record paces, and we haven't seen these numbers. It's on track to be upwards of 1988 proportions. So what do they know that we don't? Well, it could be valuations, and you've got to keep this in the back of your mind. Another thing to keep in the back of your mind is where we are in the stage of the cycle. You may repeat this. In 2021, we saw absolute FOMO hit the markets. But remember, when someone calls something a bubble, often there's further to go. And the call-put ratios that we've been seeing, which are heavily favored, of course, in the call side and complacency, may lead into a topping pattern. Have we already reached that? Some people claim we have, but of course, we'll look into this one, along with whether we're hitting a Wyckoff pattern on Nvidia's charts. So the dark pool liquidity that helped us to kind of see that maybe it was better to be just, chilling on the market over the Friday close. The number one largest trade ever recorded here on the S&P 500 quality ETF, SPHQ. QLD saw a monster trade over the last 2 years, another number one at the peaks. And then, of course, we also saw semiconductors with the number two largest trade over the last 2 years. Coincidence? Well, I think not. Clearly, Wall Street had an idea. Some of you guys were smart enough to take a little bit of profit off, and some of you are probably left holding the bag saying, well, should I really be terrified right now? Well, good news if you are left holding the bag is that at least they just made some massive transactions near the end of the day. Both XSD, which is the S&P Semiconductor ETF, had a massive trade on it right near the close, and another massive one came through on SOX, SOXX. And guess what? They're all at around the most traded zone. So this basically means this is where Wall Street has traditionally been buying the dip, or BTFDing the dip, and they're feeling maybe a little bit more confident than a lot of people out there with the absolute panic sell that we just saw over the last 24 hours. Nvidia also had a massive trade right near the close. And last time we saw this, what happened was the next day actually dropped, then it regained that level, and of course it ripped higher, creating a massive squeeze effect. So what about this DeepSeek? Does that mean that Nvidia is doomed? The valuations are all going down? Well, it depends, of course, on who you're talking to. I went over with our live streams, which of course we always do together every Monday on the opens. And we talked about some of the positives and some of the negatives. Obviously, this is an innovative moment for AI, and it proves that you can do more with less. And I think that's most likely the biggest positive factor here. It's something that everyone is going to be clamoring for. But for anyone that didn't think that we were in an AI race, yeah, we've been in an AI race for quite some time. And you must understand that, of course, the timing of this is everything. Chinese New Year's just started. Happy Chinese New Year for anyone that does follow it, Lunar New Year, obviously. And we just saw coming into Chinese New Year a massive announcement. Timing, coincidence? Well, I would say probably pretty good timing, and also really good timing for some of the things we've discussed on the channel here. Remember, we've already been kind of looking towards the bullish side when it comes to the Chinese market versus the US at the moment because, of course, of the low valuations. And because everybody is in effectively an AI war right now, when you see major Chinese equity flows this low, negativity is obviously through the roof, then that has traditionally been a turning point on markets. At the same time, imagine the squeeze that could occur through Lunar New Year as markets are closed, yet bullish sentiment hype is there. We know short interest was near those records thanks to Subu Trade here moving into the Chinese New Year. So is this a positive catalyst? Of course it is in terms of China stocks, but is it that negative for the US? Well, there are two schools of thought. Obviously, it allows middle companies and smaller companies to potentially build AI models that are going to be incredibly exciting. It could bring huge innovation. And you've then got to ask yourself, who are the most innovative companies in the world? And as I often say, the US is still the number one when it comes to some of the smartest people in the world. So do remember, this isn't over for the US. It's just all part of a massive, massive storyline that you're going to see continue through 2025. And it could also be bullish for small caps and middle caps if you're able to find the right businesses. The other bullish factors are this. The S&P 500 did make an all-time high this year. And traditionally, it goes on to make more when it does this. Now, one has only ever happened once where that was the only one. And of course, yes, you might say, well, that was pretty recent, 2022, but it has a 97.2% chance that the US market will go and make a new all-time high. Remember, 300 plus stocks were up over the last 24 hours. That is incredible breadth. And the way that we just saw that, we've never seen the type of selling we just had on semiconductors with this type of massive rally. Guess when we saw it last? 1999 and 2000. Does that remind anyone of anything? Yeah, near the end of an epic bubble that was being created in a market. And of course, many people are arguing that AI valuations are too high. So what other things do we see? Well, we saw liquidity obviously get absolutely triggered through the roof whenever we see these types of reads. According to Sentiment Trader, we have a 91% positive outcome when you're looking at the next couple of days. And that generally means that, yes, markets tend to do pretty well off these flash crashes. That is, people do tend to buy the dip. Animal spirits have been very bullish. And DeepSeek, while it is a innovative kind of concept from the limited information that we know right now, it's unlikely that I don't think Nvidia are going to be selling chips. They're going to be still selling a lot of chips. And you've got to remember, in recent interviews, of course, allegedly, we don't know this, it's already been kind of speculated that there are tens of thousands of potential cores out there that are being used even behind this particular stuff. So yeah, look, we'll see what happens with it. And if you want to find out more about that, I tagged a video on the mainstream media on our X account, so you guys can go and watch that one out. Now, what else did it do that could be seen as maybe a positive catalyst? Well, if we're in an AI war, let's say, in terms of China and the rest of the world versus America and everybody else, every country wants to win the AI war, of course, then we might be seeing more Fed cuts. Remember, the FOMC meeting is literally coming up this Wednesday. So could we get more information of stimulation for the economy? That, with tax cuts, again, has to be seen as bullish and positive for the markets. So that, along with CTAs, which are commodity trade advisors, often seen as momentum trading funds, just started to really buy back into this market. You can see here that CTAs haven't been doing anything for months, and they went really big after the CPI result. So are they going to stop buying now that we flash crashed? Well, it's likely they're going to use this as an excuse to probably start purchasing back up. And like we've mentioned before, 2025 may be the year of rotation. Things like healthcare in particular did very, very well over the last 24 hours. And that's something we've looked at in our private community. J&J, for example, was something we picked up last week, and it's doing big numbers. So it's doing very, very nicely post the earnings announcement. Also, the January barometer. So far, we've lost a few good results here for the start of the year, which basically means that we think 2025 could be absolutely wild, up, down, all around. Don't discount a 10% sell at some point. This is the nature of later cycle style investing. But the January barometer is still going to be an important one. Are we going to end positive? Are we going to end negative? And what is exactly going to happen? Remember, this stat will be brought to you guys as soon as we do get it. Now, some of the reasons we kind of suspected that we might see a sell-off were the huge rallies that we got. We went from 25% of people being bullish on the market over the next 6 months by surveys to around 46%. And you can imagine that by Friday last week, that was probably well above 50% plus. So we had a lot of people going from negative to positive. The McClellan oscillator also did that. It went super negative, super positive. And when that happens, you tend to see a sell more statistically the next week. Well, maybe we've just seen that moment with that flash crash, but the good news, of course, is dark pools came in. What other things have we been seeing that are possibly good for a lot of stock markets out there? Well, particularly the US dollar falling. Now, the US dollar triggered so many different things. You can see here that the USD rallied into its 2+ year high last week. Then it fell obviously 1.7% according to SuperTrade. And these historical reversals saw the dollar fall around 70% of the time over the next month. And in fact, it kind of continued to usually be quite negative for a while. This is exactly in line with what you'd be expecting. And it is very important to a few things that we've been looking at on the markets. Again, does that also mean yields generally will drop? Well, here are the stats around that and yields. 10-year usually does end up dropping. So could we manage to get away from the inflation problem? That was, remember, the story of the sell just a few weeks ago. Yeah, it might still be there, but anyway, we're in a AI war according to everyone now. So could these stats be actually pushing towards that? And more importantly, could that lead into something like this chart here, 2016 versus now, a deflationary boom style environment? If we are in something like that, I think gold could do very well. We've talked about this many times since 1800, 1750. We've been going super bullish on gold. And gold, we're still thinking $3,000 this year and more than likely even above that. So this is what's happened traditionally to gold post events like this for the dollar. So remember, everyone's talking about DeepSeek, but we have to then ask ourselves the question, is this the beginning of the end for the US market? Is this the end of everything and the whole structure is going to break down? Remember, just a week ago, we were looking at this type of structure post Federal Reserve cuts. And what that generally means is that we're following a normalization structure of the market kind of doing well enough in the earnings and meeting expectations to continue to go forward for now. Remember, when we have this many people euphoric, we have animal spirits this high, and we have earnings generally coming in very bullish, it's very difficult to be super bearish on markets. And you might say, but Tom, look at what just happened. I'm super bearish. Nvidia's in a Wyckoff distribution, which it could be, and therefore it's the end. Well, if semis continue to lag, and I mean lag super hard, then we've got to revisit everything. But for now, this is a flash crash in that market and possibly an overreaction, at least in terms of what the valuations are doing. So let's talk about earnings this week. We've got Tesla, we've got Meta, we've got Microsoft all coming out Wednesday with the FOMC meeting. Then we have Apple, Intel. Intel, interestingly, was up over the last 24 hours. So again, it's kind of like a concentrated attack. There are certain markets that are doing kind of poorly and most are doing well. We have a look at PE and EPS. We know that this is the main growth curve for the US at the moment. We also know that we've most likely going to achieve this 80% plus positive 12-month percent change in earnings. And that, of course, is going to be incredibly important. Along with that, crypto obviously crashed. So we saw Bitcoin get smashed. We saw Ethereum go down to 3,000. We saw Solana take a new low. All of these things occurred. Are we still bullish these markets? The answer is yes for now. So again, here are the outdated but still very important stats on what was happening last week in terms of flows. We saw slight negativity on Ethereum as it continues to struggle. 3450, 3500 is going to be important there. And of course, we've also got the one-day flows and 7-day net inflows into Bitcoin being very good. I heard that MSTR bought another 10,000 Bitcoin as well, which of course, technically takes those out of the market and brings them into the MSTR ecosystem. All right, let's now talk about the charts, and then we'll go over some options flow, and then of course we'll go over the leads and see whether the market dynamics have really shifted towards super negativity. Obviously, some of you guys are very, very highly skilled in the coding and AI space. If you do have some thoughts on DeepSeek, I'd like to take this opportunity to put them down in the comments down below and let everybody else see your knowledge. Because, of course, to me, yes, it's an important moment, but I think that people get obviously carried away with stuff. And as we find out more information, I would find it not hard to believe that not everything as it is as it seems. Let's move over here to the S&P 500, 59.50, 59.20 reached in the pre-market. As we live streamed, we really liked that level. Turns out that was pretty good by the F and dip. So that's not too bad, guys. And we did fill a couple of gaps. So remember, we actually made it down to this level and volume was up, which you'd expect on a day like today. So first signs are good, nice kind of rally there coming off the markets. You can see here on the US 500, it rallied most of the session. Let's take a look at how it did it. So it oversold itself, rallied up. Could it sell to a new low? It certainly could. So we'll look at the options in a moment. But do remember, this is still a very bullish area. If you manage to get underneath here, things look totally different. People will be calling double tops. People will be saying it's a Wyckoff moment with a dull market series of highs. So it is pretty important that the market holds around these levels. But do not lose the side of the fact that we have 300 plus stocks that were actually up on the session, and breadth is incredible right now. And particularly, we saw so many markets actually doing some big numbers. So look at healthcare, for example, going ballistic. And that's a big deal. So, we've got a lot of other sectors that may not make up a huge level of the index, but they're actually starting to do quite well. That's not usually what you would see in a crashing, let's say, recessionary market. However, things could change throughout 2025, as we know. Let's now talk about the puts. Are there a lot of puts? Yeah. People stack puts pretty much all day, which we would suspect. I never understand why people get so crazy on the amount of puts that they put in on days like today. But anyway, they get scared. And hopefully you were not somebody that was buying puts all session, because that wouldn't have worked very well for that session. Let's talk about where the put walls have now appeared. They're actually higher than current price. So, of course, are we now in negative gamma? Yes, we are. Puts are certainly, putting the pressure on these markets, as you can say. And 60.50, 60.80 is going to be a pretty important level for the markets to try to bounce back above, obviously to get rid of all of these zero DTE kind of options. We're not at 6,100 anymore, so obviously we're not pushing that 6,200 narrative just yet. But I think the positive signs are 59.50 held. And as long as that holds, that's a really good sign the market's still in an upward kind of trajectory. So remember, here are where we've got all the walls, and 59.50 remains the very important level over the next 24 hours. So if it does get down to those levels, you don't really want to see it any lower than that. Let's take a look at the exhibit, though, that really matters, which is, of course, Nvidia. We'll take a look at the chart later on today's video very soon, but let's look at this 120 zone. Now, this is a huge area, 118 to 120, everyone's stacking puts on it. We know that 150, 148 has just been too much for Nvidia, but this level will matter. It is the most traded zone. It is the biggest area that Wall Street has traditionally been most likely accumulating positions at, and we just saw huge EOD style transactions. So we know somebody was most likely buying these lows. I mean, do you guys think it's a buy or a sell? Let me know. Actually, we'll skip over here to semiconductors. And again, if we have a look at the semiconductors, I thought we'd run this one. We actually are underneath where most of the puts were. So most of the puts were sitting at 250. The semiconductor market ETF is, of course, a lot less transactional in terms of valuations. But you can see here that we do not have necessarily a huge wall at around this level. 230 is kind of the wall, but we do have large trades coming in. In regards to Tesla, nothing new here, really. We still know that 330, 340 is a very interesting zone. And basically anyone that's trading the range will be looking at 400 and 380 as potential buy areas. Let's now jump into whether we're concerned about what's going on in the charts right now. First up, the bonds market. Is it worried? I would say no. Okay, so the bonds market is not freaking out with that low. Is the volatility market worried? I would again say probably not, considering it literally dumped off the high pretty much straight away. This does seem to me as being a really good excuse to absolutely wipe out a bunch of options and wipe out a bunch of people's FOMO and bullishness. Remember, we went from 25% of people were bullish to 45, probably 50 plus in a little over a week and a half. So People are getting smashed up and down. That's why we call 2025 one of the hardest markets if you're not in the right sectors, because it's going to be absolutely wild each way. What about financials? Almost at an all-time high. I wouldn't call that bearish on the economy. Remember, debts do drive economies, so that's important. And the US 2-year actually dropped off along with the 10-year, which also dropped off and hit into that important demand zone. So again, if it starts dropping this area here, then that's going to be a slight positive for most likely Wall Street to be saying, you know what, we need more cuts. Don't worry about it, Fed. We're going to get more cuts. FOMC Wednesday, that could be a catalyst as well to be looking at. Euro did drop, but that's to be expected. So US dollar, of course, is in focus here. It's gaining a little bit of steam over the last 24 hours. And my suspicion is that we could do something like this, push down to 106. And if we drop 106, then of course, I think we're going a lot further down. You saw the stats earlier in today's video, and that is something that we're very much looking at. So of course, what's going on here with the dollar this year is going to be in our calculations for quite a few things, including, of course, gold, which is doing exactly what I'd want it to do. Stabilize before the high. When it breaks out after a nice sideways, what we call a pit or a pullback in time. If it rallies from that, I'm looking for 29.50. Obviously, we think 3,000, but 29.50 might be where it stops early. And silver, nothing's changed. Wait, be patient on this one. Series of lower highs and lower lows. Obviously, we've got to change trend. How are we going to do that? Take 31 on the bull end. With oil, it's come down to the perfect area that we were looking at. So we're back in that demand zone or support area. This is where we're looking for oil to potentially find buyers. And of course, it's the first time in all of this sell-off in the last couple of weeks that we can say, okay, well, we're actually interested in oil again. 75, maybe 10 plus a barrel could be quite interesting, 75.20. So we'll set a little alert there. We can now move down our alert to this level here. And this is going to be a very important level for us. So we'll be looking for that to see where the bulls regain control on the oil trade. In terms of Tesla, trade it between 380 and 450 pretty much. And if it drops 380, I think it's going down to this level. And that's what I tend to like more on Tesla. I think Tesla is going to be a very interesting one in terms of earnings, forward projections, and what happens here. As of course, there's a lot of news about Elon coming through all the time. Apple managed to bounce ahead of the earnings. Again, very interesting level, most traded zone. Couple of large trades coming through. We'll report an update on treasuries and what's going on with Apple over the next video, so don't worry about that. But yeah, some big stuff there ahead of the earnings. And Nvidia, of course, getting absolutely smoked. Now, a lot of people are going to say this is the beginning of the end. Now, Wyckoff traders in particular are going to say that. Why? Buying Climax, UT, UTAD. It's very easy to see this as a distribution pattern, and it could well be a very important chart that you might look back at and say, wow, how easy was that? I think, though, that it's going to be quite muddy. So, do I think there are buyers here? Yeah, I do think there are buyers here. I mean, we saw huge volumes. The EOD is no joke. People were buying up. You've got to think they were, and it's the most traded area. But you cannot discount the fact that this is now not the prettiest of charts, and it's in arguably the most important sector for the US. So this is going to be an evolving story throughout the year as we find out more information. For the temporary, though, we've got to think that probably there's buyers here. And if you actually look at semiconductors, which will load up, you can see here it swings the low, but it still holds around the same area. Again, this could be seen as a distribution pattern. So for people that are really bearish on markets, you're probably looking at this and saying, if this rallies, I'm going to short it. I can't necessarily say that is a terrible concept based on TA alone. I mean, if you're looking just purely at the TA, you would say, okay, well, markets have definitely taken these lows. We've traded down pretty hard on Nvidia. And if we rally now and get one of those relief rallies, let's say 10, 15%, all the way back up, that there are going to be bears there. I would guess there are going to be bears at a relief rally. So, of course, this will be an evolving story. Make sure to subscribe. We'll be tracking those together. HSI could be a very bullish event for them, get people back talking about the Chinese market. Obviously, we've seen huge outflows. We've seen this usually be a bullish catalyst. Timing is everything. Chinese New Year, people talk about how positive all this DeepSeek thing is. And then all of a sudden you get, a +2 in valuations in the forward PE. And yeah, you've got some pretty nice action, of course, on potentially the tech companies in China. So if you look at something like a KWeb, you can see here it's been rallying a little bit in recent weeks. And again, it's well off where it was at those peak FOMO highs back in October of last year. So some positive signs there, and there certainly could be a squeezy kind of event if people are caught off guard on that. US 2K didn't drop that much because this is not about regional banks. This is not about biotech, which probably is going to do even better. When you think about it, cheaper compute, more companies, more innovation, more ability for these smaller companies to navigate this minefield of what was just the big boys kind of game when it comes to buying every Nvidia chip under the sun. It's actually quite exciting from that aspect. So, of course, small caps may actually do well. This could be a huge catalyst for small caps, and you may see something like this happen, especially in some of the sectors. An interesting thought process, and obviously there's always a bull and a bear story. NASDAQ dropped to the first support level we had on the charts last week. Found some buyers there. This is an incredibly important zone. Obviously, it needs to hold this. Nice wick, big volume. We'll report back once we have more edge. And what that means basically is we're going to be looking at price action a lot. Remember, buying the V is better than buying the dip. However, when you get dark pulls at the dip, that's certainly something you can pay attention to. What about Ethereum coming off the 3,000 lows? Obviously, we're looking at 3,450, 3,500, which we've talked about. Nice wick, pretty weak looking chart. Obviously needs to get above that. That'll be good. And Bitcoin, I got to say, it held really well. Held that 100,000 really strongly. And you can see here again, there are buyers for Bitcoin. So do I see an all-time high coming for Bitcoin soon? Yeah, I still think this is probably the temp low for now. And a lot of people are turning really negative. And again, if you've got a wall of worry, you generally have more of a chance for it to actually rally up. So it's amazing how sentiment shifts here, the narrative, everything is changing like this. And that's why I'm going to say if it's in the press, it's probably going to be in the price. And ultimately, on top of this, 2025 is going to be a time for traders and investors to have no emotion and really start to, focus on your leverage, because anything can happen. It's not as easy as 2024 or 2023 in that aspect. Leverage is going to be, or leverage management is going to be very important. So be careful out there, guys. Federal funds rate coming Wednesday, 2 p.m. New York time, 2:30 press conference, obviously bank holidays for the Chinese New Year. And as always, guys, if you enjoyed today's video, then please remember to subscribe, follow us along. Also, if you're from Perth or Brisbane, sign up to the event. Spots are filling fast. It's going to be a sick event. It's going to be awesome to meet you guys there. Totally free, so come. And then, of course, follow us over on Twitter, X, and LinkedIn if you want to see more about my psychology posts. I'll be posting a little bit of commentary on DeepSeek there as well over the next couple of days as I unpack exactly what I believe is going on, while I interview some of you guys to find out whether there is anything I'm missing there. Thank you so much. We'll keep following it along. We'll keep going it. And guys, remember, no emotion in 2025. That's going to be the key to success. And we've seen some big dark pulls. Let's see how that plays out. Bye for now.